Good morning, all you fossil fuel burning 3,000 energy investors. Thanks for tuning in. This is Mr. Oxy coming at you live from Palm Beach in Florida. It is Saturday. It is May the 7th. The months are just flying by and we're just 3 or 4 days away from Occidental reporting. But today we're not going to talk about Occidental Petroleum. We're going to talk about one of my favorite stocks, and that is Energy Transfer. Now, I know I'm not supposed to have a favorite energy stock. I'm not even supposed to have a favorite stock. But really, this one, to me, screams buy, and I would like you to take your time to convince me otherwise once you've spent a few minutes with me reviewing Energy Transfer in their recent quarter that they just reported. What are the key points? Energy Transfer reported strong first quarter results after adjusting for last year's windfall. Last year's windfall was Winter Storm Uri, which skewed Energy Transfer's Q1 reporting. Its earnings report made it look really, really phenomenally good. Now, guess what? If you actually back out Winter Storm Uri's effect on last year's earnings for Q1, this year's Q1 earnings were even better than last year's, except for Winter Storm Uri. The Master Limited Partnership is on track for an even stronger year this year than last year. And with new expansions on the horizon, Energy Transfer should have the fuel to keep growing for years to come. So, what's hiding beneath the covers? Energy Transfer strong showing in the first quarter and continued increasing demand. They expect to generate between 12.2 and 12.6 billion of adjusted EBITDA this year, up from the initial forecast of 11.8 to 12.2. It's a nice uptick. Previously, the top of their range was 12.2, and they've upped that from 12.2 to 12.6. Improving conditions in the market have the company boosting its capital spending plans. That's something we haven't seen for quite a while, but it's happening more and more now, where energy companies, specific to oil and gas companies, are spending more on capex than before, and this is good for energy investors and good for the economy as a whole. Energy Transfer expects to invest 1.8 to 2.1 billion on growth projects in 2022, which is up from 1.6 to 1.9 billion. So pretty much a good picture all around. They recently completed 3 expansion projects while starting construction on several more. In addition, it is pursuing 2 other large-scale projects. If we take a look at the last quarter, so just a few days ago on May the 4th, they announced their earnings for Q1 and came in at 37 cents. The analyst consensus was 32 cents, which is a 14% uptick from what the analysts had forecasted or predicted for Q1. Not a phenomenal beat, but pretty good, especially if you, as I said at the beginning, back out Winter Storm Uri from Q1 of last year. This is actually quite a phenomenal quarter. It's on sale. You can buy Energy Transfer for $11.62. In my mind, that price is screaming buy. You know, I have built up a significant position in Energy Transfer over the past year or so. So my cost basis is lower because right now Energy Transfer, as you can see at the bottom left here, is actually trading near to its 52-week high. My cost basis on Energy Transfer, just off the top of my head, is probably about $8 right now. So Energy Transfer is sitting in about a 35–40% gain position for me, but I think it has lots of room to run. In this blue circle here in the middle, we can see the earnings per share on a trailing 12-month basis, $1.90. And then the PE ratio, like I said, some things just make you look at this and say, this is a screaming buy. A PE ratio of 6. So when you have a trailing 12-month PE ratio of 6, that stock, any stock with a PE ratio of 6 looks phenomenally cheap, unless there are some underlying fundamental problems, which in the case of Energy Transfer, I don't see. Pays a very nice, juicy dividend. The annual dividend yield, almost 7%, because it's currently yielding 80 cents on an $11 stock. But more about the dividend in just a second. The adjusted EBITDA for the quarter, 3.3 billion. Then the distributable cash flow attributable to the partners, 2.1 billion. Excess cash flow after distributions of approximately 1.5 billion. You know, to be quite honest, it's very tough to find negative stuff in here. I know there's a lot of litigation and things that are still going on related to Energy Transfer, but you know what? They don't even talk about it. Even the analysts who are on the call, nobody even asked any questions about litigation or anything related to like the Dakota pipeline or anything like that. On an incurred basis, Energy Transfer had excess distributable cash flow of approximately billion after distributing 618 million in growth capital of about 390 million. On April 26th, they announced a quarterly cash distribution of 20 cents per common unit, or 80 cents on an annualized basis, which represents a more than 30% increase over the first quarter of 2021. And right here at the bottom, as it relates to dividends, the goal is to return distributions to the previous level of 30.5 cents per quarter, which would be $1.22 on an annualized basis. Now, keep in mind here, or take into consideration, that whatever the dividend is, so at this, if they get back here to $1.22, and the stock is trading, just to make it easy math, at 12 bucks, then you can say, well, that's a nice rich dividend. But remember, if you're getting a dividend of $1.22 on a lower cost basis, then your dividend is much higher than whatever the math is in terms of that percentage. How effective is Energy Transfer as a company? It does a consistently good job compared to other companies like its peers in the oil, gas, and consumable fuels industry. You can see the snapshot here at the bottom. I'm not going to dwell on this, but the numbers are good. They're either sort of in line with the industry or thereabouts. So nothing really to report here. Energy Transfer is very effective and certainly performing at the very least in line with its peers. How about profitability? Well, this is an interesting little snapshot here. It has typical profitability characteristics of a company in the oil, gas, and consumables fuel industry. It does a better median job converting revenues to profit on a net margin basis. Let's look at that just for a second here. You can see that Energy Transfer actually underperforms the industry when it comes to gross profit and operating profit on a trailing 12-month basis. However, they're very efficient in turning even that underperformance on gross profit and operating profit into net profit. Energy Transfer is a very profitable company with the net profit margin for the trailing 12 months certainly above the industry median. Not doing too badly. How about the financial strength analysis? You guys know by now, always look at the debt, right? The debt to capital ratio is 54%, which is in line. But if we look a little bit further down, we can see the change in debt, total capital quarter over quarter. This is Energy Transfer, and this is the industry. So you can see there has been a really quite an incredible change in the debt structure over the last quarter. And obviously it helps that you're making money because it allows you to do that. From a quick ratio point of view, there's nothing to report there. The little dots mean that from a cash point of view, if we talk about the quick ratio, we're talking about cash versus current liabilities. They're kind of flying close to the sun, but then again, at the same time, their interest coverage for the most recent quarter is 5.22. Now, right here at the top, you can see they should be able to comfortably repay the debt given the interest coverage of 5.22. No problem managing and servicing the debt, but at the same time, they still have a focus on reducing the debt, which is pretty good. Let's go to our friends at TipRanks. Here I've got 10 analysts who are saying this is a strong buy, 10 ratings, 10 of them say buy, no one says hold, no one says sell. I can't imagine anyone putting a sell rating on Energy Transfer right now. Also couldn't really imagine anyone shorting Energy Transfer. If anything, this stock should go up. But of course, as we know by now, the stock market and the fundamentals don't necessarily always match up. Based on the current price of about $11.50-60 or so 11 and a half. This analyst median target price of $15 represents a 30% upside. I actually see Energy Transfer, I expect it to kind of blow past this. You know, the highest price target we got here is 20 bucks. I don't know if we get to 20, but maybe this year we can get to $17, $18. I think we get past this median. Anyway, the lowest analyst price target is $14, and right now it's trading at 11 bucks. So just the upside to $14 would be a 25% upside, just at a glance. Here you can see some of the, it's basically a one-day chart, so there's not much to look at here, but you can see the analysts have a 10 rating on it, outperform. And pretty much anything that I have in this blue block over here is bullish, right? So anything that's bluish is strong buy, bullish, increase, bought shares, insiders, very positive, etc. You can see the next earnings is coming up August the 9th here at the bottom of the screen. The earnings per share forecast, I think it's only 3 analysts who were brave enough to put in an EPS forecast for the next quarter. So a little bit too soon on that one. But anyway, it's positive. Anything here is blue, it's strong buy, bullish, etc. So as a general rule, the consensus as it relates to Energy Transfer is it's bullish and possibly not a bad time to get into energy transfer if you were thinking of parking some money into a high dividend paying energy stock. This little screenshot here is from bar charts. I went to the technical indicators. Obviously, we have a lot of smart people on our channel here in our community of now almost 3,000 energy, gas guzzling, sports car driving, fossil fuel burning investors. But anyway, here's the bar chart opinion when it comes to technicals. So, you know, I'm not going to bore you with this because you can see it for yourself. This entire column says buy, 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 buy. At the risk of sounding a little bit like Jim Cramer, almost anything I look at in relation to energy transfer says buy, and very few, if anything, says sell. Current quarter, that's the quarter we're in now, going to end on June the 30th. The average estimate is about 30 cents. Only 3 people were brave enough to put in an estimate. The estimates range between 23 and 36 cents, but right here at the bottom is the most important line, the growth rate estimated year over year, 50% in terms of EPS. That is pretty good. So guys, this is a 50,000-foot flyover on energy transfer. I don't know if you're in it or not. If you are, maybe you can share with us where your mind's at. If you're not in energy transfer, and you think that there's a compelling reason for you to make an investment, maybe you can share that with us as well. Either way, you know, if you're in the stock, you're probably okay right now. It's been on a tear lately. It's up nicely, regardless of all the market volatility. Energy transfer is in a good position right now as a well-performing energy stock, as is the case with most energy stocks. But specific to energy transfer, are you in it? Are you out of it? Do you think it's a buy? Do you think it's a sell right now? Do you want to take some profit? You're just going to hold it? What do you think you're going to do? As for me, I'm holding. And occasionally when there's a sharp pullback, I pick up a little bit more. I have energy transfer in my personal accounts. I have energy transfer in my corporate accounts, and I have energy transfer in every one of my client accounts as well. So I suppose that's a bit of a big giveaway. I'm bullish on energy transfer. But like I said right at the beginning, we're not supposed to have favorites. So let me know what you think. I look forward to your comments. Bye-bye.